What's going on, guys? It's Ricky with Techbuds Solutions. Thank you guys again for joining us for another live stream. I do want to apologize that this live stream is coming to you guys a little bit late. I usually go live 15 minutes before the market opens. Something came up that I just wasn't able to take part of the live stream, so I do apologize for that. But it looks like you guys didn't really need me this morning. RTNB did an amazing job, and that's definitely something that I'm going to be talking about, as well as I do want to give a shout out to all the different admins within Techbuds Solutions that we're able to properly manage our group chat and make it that much effective and efficient. If you guys see, it's almost like self-sufficient right now. You guys don't need me anymore when it comes down to just everything it is that you guys do. You guys do an amazing job just managing the group together, and when something goes wrong, you guys know to reach out to an admin. So I 100% want to thank you for that. Something that I do want to talk about today is I'm going to go and break down a series of stocks that we saw potential in this morning, and then I've been able to go back and forth when it comes down to kind of preparing for Friday, for tomorrow, right? If I'm not mistaken. Yeah, today's Thursday, so it's definitely been a quick week, and one of the, I think, most important things to understand is that, we always say, let's make sure that we end the year on a green note, but also understanding that, making sure that we end the year or end the week on a green note. So what's the best way to do that? You know how we usually do a Sunday stock talk to prepare for the week? Well, I think, today I'm going to just kind of break down a series of stocks that I see that could potentially do well, kind of talk about some certain stocks that I'm in right now that are not doing as well, and kind of my whole thought process on that. I do want to give a shout out to Kettle Cooks. If you guys could see the title, it says how Kettle made $1,200 on a quick day trade. If you guys don't know about Kettle, he's been completely killing it within the group. I do want to give a shout out to Dimitri for also killing it within the group with his trade on RTMB, if I'm not mistaken. Like, you guys just have been so, like, guys, our admins are even killing it. Like, I don't even know how to put into perspective. Just everyone's been doing so well. And it's just such an amazing community to not only have, like the group leaders, but have like admins. And it's just a team. You guys definitely get the environment. Like, if again, it is a free group. The link is down below. It's a free Facebook group. On the top pinned post, there are the series of group chats, or the link available to the Discord group chat. Reach out to Kettle, reach out to Dimitri, reach out to me, tag me, Connor, Brad, Kyle, and then there's two other mods I believe that we have that the other group leaders added, and that's Nephew and then Sniper Trades. I just want to give a shout out to all of you guys because it's such an amazing community, and it's been so cool to see how well you guys are doing. So we keep getting positive feedback every single day, so I want to thank you guys for that. Let's kind of get right to it. So really quick, since you guys are going to want to see, I'm going to talk a little bit about Kettle and his trade. Kettle and his trade, if you guys see, he's in the live chat right now. So Kettle and Dimitri, they're just running it. But Kettle, I shouted him out yesterday as well, but he took a position size on RTNB, which is our call out yesterday. And it's something that I'm going to talk about today, but he did a really good job. He's very disciplined when it comes down to, like, when he goes in, if he has to cut his losses, he cuts his losses quickly, but he's definitely a momentum trader based on the previous trades that I've seen that he's done. And he goes in and he gets out, and he knows how to lock in profits. He walks away, and he has a very, I think, modest approach when it comes to trading that can be very understandable. So that's definitely something that I'm going to reach out to him about. So this is pretty much his trade, if you guys can see it right there. I'm going to end up making it the thumbnail of this. So for those that are watching this and want to see it a little bit more clear, he's definitely going to be the thumbnail with his amazing cover picture and stuff like that. So Kettle, an amazing guy. Dimitri, an amazing guy. Dimitri messaged me within the Discord group chat today, and he told me he took a huge position size. So if you guys didn't see, let me just start sharing my screen. And he did an amazing job when it came down to the actual position that he took on RTNB, and he saw potential. And this is a question that I asked, and it was kind of different people DM me and be like, what is it that you meant with that? I asked when I messaged in the group chat, I was like, who took advantage of RTNB? There are some that say, dude, we did amazing, the thousands of dollars of profit that we made, a couple hundred, the percentage growth, focusing on that. And then others were like, no, I didn't invest in RTNB because I didn't see value in it. And there were a couple other traders that were like, oh no, I missed out, my mistake and stuff like that. I want you guys to understand that it's no mistake just because you didn't trade that specific stock. And I'm going to tell you this approach why. And this is how it should be, right? It should be that when you take a position on a specific stock, it's because you see potential in it. And if you don't take a position on it. So regardless if you made money on the stock because you didn't take a position on it, or if you did make money because you did take a position, those are the two options that every trader should have. If they see value in it, then they should invest in it. If they don't see value in it, then they shouldn't invest in it. Is there anything wrong with either or? The outcomes are the only things that are what can differentiate them, the two just opportunities, right? Understanding that if you didn't take advantage of that opportunity, it's because you didn't see value in that, and that is amazing, because you shouldn't invest in what you don't understand or see value in. It's as simple as that. There's just so many other. It's just like if you're really going to shoot yourself in the foot for not taking advantage of an opportunity of a stock that did very well today, then you should really look at the top gainers at the overall market and see that stocks are growing randomly at paces of a couple hundred, if not 1,000% every single day. Why shoot yourself in the foot for an opportunity that you weren't either exposed to or didn't understand? Understanding that, why shoot yourself in the foot? You have to understand that if you do see value in something, then set up a plan, manage your risk, and then go for it. If you don't see value in it and it ends up doing well, who cares? Understand the trade, why it did well, and build and develop yourself as a trader. So for those that did well and made a profit, 100%, I want to thank you guys for everything that you guys do. And that's just a reflection of your hard work. But as well as for those that didn't take advantage of RTNB, which is going to be like the big stock for the day, you guys did an amazing job. You guys didn't see value in it and you didn't trade it. 100%. I don't want you guys to be traders that just because someone says, oh, I just made $1,200 on this specific stock, that, oh, okay, I'm going to jump into it as well. No, guys, you invest in what you see value in and you don't in what you don't. It's as simple as that. So I hope that, that makes sense to you. But I'm going to start sharing my screen so you guys can see exactly what it is that I'm going to be breaking down today. And when it comes down to the positions that people were taking on RTNB, so again, RTNB has seen really good volume, and it's a very common trend that it's been seen within the past 5 days, if I'm not mistaken. So let's do a 5-day analysis. Been on a consistent upward trend from 43 cents. What does that tell you? From 43 cents, it's been seeing a consistent upward trend. And if you could see, it peaked out at 380 yesterday, 2 days ago, I apologize. It saw a pullback, and then that's when, if you guys caught my live stream yesterday, I identified the margin that it had and the resistance that it had at $2, and then when it broke above $2, that's when I called out that stock, and then it hit highs of like 280, saw the pullback, and then simply rode down. If you could see, based on previous trends, that every time it has a nice little pump, it slowly rides down. It has one pump, and then it slowly rides down. Has a pump, slowly rides down. Has a pump, and slowly rides down. Understanding, are these pumps going to be every single day? No, just understand that because this stock is so relevant right now, because it's so hyped up, yes, it might continue to experience these, pump and dumps almost, right? Understand that this is not a stock that you should potentially be swing trading. I mean, I don't see the value in why you would be wanting to hold this stock, when it just sees huge, losses of value. So if you see from where it went to from, after market hours to when it peaked out, that's 60% loss, right? And from where it peaked out at and where it fell from yesterday to the top, that's 32% loss. Today, if you would have bought at the very top, 35% loss. That's why it's so important to understand these are momentum trades. These are stocks that usually do their ins and their outs all within the first couple minutes of the market open. And understanding that if you didn't take advantage of that opportunity in the very beginning, then you're most likely forcing the trade, and you're most likely trying to invest in something that isn't really going to see, like the potential that you wanted to see. You're forcing it, and you're kind of just, you experience more red days than green days with that specific approach. Something that I think that our team does very well is we identify critical points. And what I mean by that is yesterday we called out the resistance that it had at $2. When it broke above $2, it had that nice little pop. We call out a technical breakout, and that's what it did. Doesn't mean that it was going to do that 100%, and that's why we manage our risk. The same thing with this morning. The reason that I saw value in this specific stock was, again, during aftermarket hours. As of yesterday, it had a resistance at $2.20. What the heck? Draw the line. So what that means is from $2.20, it was struggling to break above that. And then during pre-market hours, which means after this dashed line, if you guys could see right here, it had a support at $1.80. So again, very similar if you see the previous trend. Again, the day before it had a support here at 150 and then resistance here at $2. Again, this is a setup for a technical breakout. And then right as the market was about to open, the demand started to increase. I'm going to go to 1 minute frequencies. And as you guys can see, it popped right up. The demand started to increase. It started to flatline at this resistance, right? At this the resistance that it has at 220 that it had all day yesterday after market hours, and then it broke. And because of that break, because the stock is so relevant, and because the stock is so hyped up, that's why it experiences these huge pumps. But understand, once it starts giving signs that it's seeing pullbacks, once it drops below the EMA line, or once the RSI indicator is indicating that it's more on the overbought side, then why force the trade? Understand that these all have trends. These all have certain characteristics on why they do well. A lot of it has to do with volume, with demand, with hype. And understand that if you don't catch it in the very beginning, or you don't catch it before everyone else does, then you're going to most likely be riding the roller coaster down. I just want to give a shout out again to Kettle Cooked for doing an amazing job and locking his $1,200 worth of profit. And Kettle has been an amazing trader within our group, as well as Dimitri and all the other traders that have been doing so well. And it's not because of anything that I'm doing. It's because they do their own analysis. They understand what they're investing in, and they understand these technical breakouts, or when a stock, it doesn't have the potential that it had in the very beginning. Because we understand that once the hype and once the volume really dies out, the stock, everyone understands that it's like a pump and dump, right? Therefore, it starts slowly decreasing in value, and that's in tens, 10, 20, 30% potential for loss when it's all the way at the top. So make sure you understand when you're trading these momentum stocks, that you understand where you're getting in, that you understand, why it's moving, and that you understand where you should most likely be selling. Don't get greedy and just lock in profits. RTNB was a stock that got halted like 3 or 4 times yesterday. I'm not too sure if it got halted today because I wasn't a part of it. But you just have to understand the importance of making sure that you don't get caught on the pump and dump, that you have to be smarter than the 90 to 95% of people that are trading it. And if you don't see value in it, or you don't want to risk it, because obviously with this specific stock, there's so much more at risk because of it was at 45 cents just 5 days ago. It was trading at $3.80 3 days later. That's obviously think guys, that's not hard to, I think, understand that obviously there's some hype and demand and volume because it's relevant. I would like to follow up with this one maybe in a week or 2 weeks and see that it's most likely back at that $1 mark if the hype ends up dying out, because people understand that the stock isn't really worth what it's being traded at right now. It's just all this hype and all this demand that people build up that people are able to take advantage of, but it's only those that understand how to take advantage of it that succeed. And if you don't know how to do that, then simply don't trade it, or do simulation trading, which is trading with fake money. So just wanted to break that specific stock down and I kind of just break it down for you guys, because I don't want you guys to lose money, and I don't want you guys to feel like you have to trade or invest in something that does well. Who cares if it does well? There's so much more opportunity later on that you can take advantage of. And if you don't understand this one, then simply don't trade it. I can't stress that enough. Okay, I got a little hyped up there, huh? Man, gee willikers. Okay, so the next one that I'm going to be talking about, and it's going to be 2 stocks, not AMD. So AMD is doing well today, and well, it was doing well during pre-market hours, and that's totally fine. All we wanted to see it do is show signs of upward momentum, and it's slowly doing that. If you could see, ever since the bounce there, it's been doing it very slowly, and unfortunately, it saw a downward trend, but it's holding at a support that it was holding all day yesterday. So that's what we want to see, and it looks like it's starting to see an upward trend. I'm green right now with AMD, and I'm probably not gonna sell my position until we get above $13 to $13.50 because of the overall potential that I see. Again, this is AMD, and if you don't see value in it, then definitely don't trade it. But this is a company that's partnered with Apple, multi-billion-dollar company, and I see an overall resistance here at 13.20 and anything above 13. So once it goes above 13, I'll put my stop loss there, and I'll give it that cushion and follow with the trailing stop loss if it continues to see an upward trend. And that's pretty much my breakdown on AMD and what it is that I see. I think the best approach that I could have taken with AMD is before getting in a little bit too early and having to have cut losses a little while ago. is that I should have waited for more of a bounce. I was thinking about swing trading it. So when I'm thinking about swing trading it, why was I looking at 2 to 3 day analysis? When you swing trade a stock, at least in my approach, you most likely want to see on how long it takes to see the growth that you want to achieve. So if I wanted to buy at $12 and I wanted to hit $13, I have to go based on a previous trend and see how long it actually took for it to perform that way. But I tried to get in too early. I tried to get in, and unfortunately, I was writing it down. But it wasn't until it really started to hold above $12 and show the sign of upward momentum that it started to really do well. And I think a lot of our traders, were able to experience that. So that's just something that I wanted to talk about. RAD, guys, we called it out perfectly. It was one of our top stocks to look out for August. The reason why was because we were able to understand this technical support that it had at 220 overall. Even if we do I'm going to do a 180-day analysis, but really just focus on this area right here. Nope, the spread is too wide. Whoa, Ricky. Right here. So we could understand that it had a support here at 221, hit highs of about almost 280, saw a pullback, bounced again at 220, 221, hit highs of 240, bounced again at 221, hit highs of 236, really flatlined here, and then it pumped right up. The reason that I was kind of iffy about RAD was because it was flatlining so much at the support that it was I think it most likely might break the support. But now if you could see this EMA line, it looks like it's really starting to trend back up, and that's what we want to see. Today, it finally broke above 230, and I was a little afraid that this trend was these resistance or where it would peak out at were getting smaller as it went originally almost to 280, then to 240, then to 235, and then now it's at 230. So just understand that it is showing a trend of smaller bounces. But it definitely still shows potential, and the risk was very small. What I mean by that is when we were breaking this stock down, we understood that the risk was very small. It was 1%, 1 to 2% at most. What I mean by that is we understood that the support was at 220, and I was calling out, my buy at 221 to 222. Therefore, if I stop loss out, even if, it's all about managing your risk, if I stop loss out at 220, that's only 0.88% loss. Therefore, my potential for loss is much smaller than what my potential, what the heck? Is much smaller than my potential for profit. And what I mean by that is, by getting in at 221, even 222, let's do that. My potential for profit to 230 was 3.5%. Again, my potential for profit is much greater than my potential for loss. Is that trade worth taking? Well, it is if for those that see value in it. When it comes down to the risk management, obviously the loss or the potential for loss is a lot smaller than the potential for profit, and that's why I saw value in this specific stock. Okay, I do want to give a call out for M. We called out this one pretty well. We wait for it to set its support, and ever since it broke above $20, that's when I called it out. It's been breaking these resistance consistently and seeing consistent signs of upward momentum. Just know that it did hit a resistance at around 21.30 based on its previous trend, if I'm not mistaken. If we could see right here, that's pretty much when it had that huge drop. That's pretty much where I ended up peaking out at. So that's why most likely it's seen a downward trend, but it does have this huge margin to make up after its bad earnings report. So I just wanted to call that out and let you guys know and expose you guys to the opportunity, but it's for those that see value that are able to take advantage of it. So if you want to take it, again, this is Macy's, a multi-million, if not billion-dollar company within the United States, if you guys are aware of it. But that's pretty much it. Just wanted to expose you guys to the opportunity. Up to you if you guys see value in it, and break it down and see if you can identify potential. And if you don't, then don't. Save looks like it's finally bouncing. Again, this is Save, multi-billion-dollar airline company. And again, after a bad call, it started seeing a downward trend. And if we look at overall trends, now we would have to look at a 2-year low. A 2-year low, it's at $33 or something like that, 32 something. So I was being very patient. I was making sure that I was letting the charts do the talking. And today, as of today, based on, if I'm thinking about swing trading this stock, then I have to look at it to see, how long it's going to take for this to play out the way that I want it to. Until it breaks, I'm going to still give it some cushion. I want to identify a solid bounce. So what I'm going to do is if I plan on holding this for about 20 days, it's barely crossing the EMA line, barely crossing above the EMA line, if you guys could see right there. I want to hold above the EMA line and really indicate signs of upward momentum, and the EMA line to be right under the candlesticks. That would give me a better understanding that it's trending back up, and this could definitely be a stock that I see value in the long term to be able to hold and then later sell at $50. The reason I say that was if you guys can go that far back, it used to trade this low, and then it had that huge margin or huge profit margin that it made up. And it's huge. It's 33%. It's something that I see value in. And if it bounces, my potential for profit is much greater than my potential for loss. And it makes sense to me. It's as simple as that. The last one is JDST. This is the last one that I'm going to be talking about, and the one that's kind of changing my mind. What I mean by that is the reason that we called out JDST was because it had a very common and popular trend here at $58 to $60. It usually bounced pretty well, as you can see, and hit around $70, came back down, bounced here, hit $66, and then came back down, and then it hit highs of like 62. So if we even go further and go to 180-day analysis, it's been a very common trend that it's been able to bounce at this support line very often. Yes, it's gone below before, but the thing that I don't like about JDST at the moment, so I'm down, again, my entry point is 59.03. So I'm down a fraction of a percent. So that's not really what I'm worried about. What I don't like about JDST is that it's flatlining and holding too well below $60. Usually based on previous trends, it ends up actually bouncing right at the $60 support. It's very quick. Even if it does flatline here, it's only for 2 to 3 days. It's been like 5 days. All this week it's been holding here, and it's just I don't see that as a good sign. There's a lot of uncertainty when it comes down to our economy. And again, this is gold-based. This is a gold-based ETF that's bear, meaning that it goes with our economy. So if our economy goes down, so does JDST. Gold prices are doing so well right now that these are at their peak right now, right? And if we see JNUG break above $19, then we're going to most likely see JDST break below 58, and that's where I'm going to cut my losses. Again, I would say I'm going to manage my risk at 3% for this specific stock, but the reason that I'm changing my mind on this specific trade is due to the fundamental understanding that our economy might not be at the best position for me to hold this gold-based ETF. This is, again, just my opinion. I'm in the stock, so there's no way that I would, if anything, people might be thinking I'm trying to promote this stock. If anything, I'm saying that by tomorrow, if this stock does not break above $60, I'm going to either lock in my profits or cut my losses on this trade, because I don't want to hold it over the weekend because of all the news that has been coming out with President Trump and with the possibility of going to war. That's not a good sign for us. That's a good sign for gold, which then I can simply cut my losses at about at max 1.66%, I think it was. Again, a very small fraction, and then just focus on what I see value in and what makes sense. Again, I'm letting the charts do the talking. It's kind of flatlining right there at the $58 support. I was trying to be patient. So something that I talked about was when you're swing trading, you have to be patient and let it do its thing. It's flatlining way too long, I think, in my opinion. And it's not showing signs of a bounce. Does that make sense? So if it's not showing signs of a bounce that it usually does within its previous trends, then that's what it's kind of showing me my uncertainty. Maybe I'm not being as patient, right? So you guys can let me know if you guys think I should be more patient. Maybe it is going to break the support and see a downward trend, and maybe that's why I should either cut my losses or lock in my profits. So I'm going to give it until tomorrow. I'm going to have my stop loss set at 57.99. So if it breaks below that, then I'll simply cut my losses. But if it continues to see an upward trend and it holds above $60, then that's where I'm going to set my stop loss and put it at $60 and just lock in the $97 per share. So I'll probably make like $100, very, very small. So it's nothing huge, but I just wanted to break it down and let you guys know kind of my approach or my breakdown on JDST. Do I think it has potential? Yes, based on previous trends, but due to the certain position that our economy is at right now, and due to a certain kind of just stake that, kind of signs that gold is showing, that it's showing to be very strong. It's showing some signs of uncertainty. So I'm more than welcome, and I'm more than open to feedback. But yeah, so that's really just it. So I don't know why this guy's just saying, look at AMD. I've already talked about AMD within the live stream, man. Sorry about that. This live stream will repost if you want to wait till it reposts. I already broke down AMD and why I saw potential in that one. But that's really just it, guys. So thank you guys again so much for tuning in. I do want to let you guys know that due to the request of a certain member, I'm going to be making a video on people are having I think I can kind of revise. I've made a video about how to identify potential, you know, how to get in at a good buy point, as in a good entry and stuff like that. But they want me to kind of revise it and kind of give more of my approach in my current position right now. So that's something that I'm going to do, and I should be having that filmed and edited helpful video by tomorrow. So that's going to be the helpful video by tomorrow, and that should be up at like 5:30 Mountain Standard Time for tomorrow for those that want to tune in. I will be going live for our live stream tomorrow, and that's going to be 15 minutes before the market opens. I promise you that I will. And then we have to, I'm going to have to confirm with you guys either tonight or the following day to make sure that our, you know, the t-shirts and all the apparels are going to be available for pre-order tomorrow. So thank you guys again so much for tuning in. Thank you guys again for everything that you guys do. Just know, for all those that are going to be asking, I'm using TD Ameritrade, the Thinkorswim platform, for the platform that I'm using. For all those that, you know, either experienced a red day or a green day in the market today, just know that, you know, these red days are designed to bring people down, but it's those that, you know, overcome these obstacles and overcome these hesitations that really see success, right? So doing it at your own pace. So if you see that you experienced a loss that was like very discouraging, then maybe you should be investing a little bit less money. If you experienced a loss based on a simple mistake or breaking one of your rules, then what did you learn from that? Don't break your rules. So continue to develop and continue to learn. That's one of the biggest areas of opportunity, and continue to only invest in what you see value in. I want to thank you guys for everything that you guys do. Continue working hard, continue following your dreams, and let your passion be expressed through all your hard work. But understand that you are the only individual that will, you know, truly be what like defines you as successful. And what I mean by that is, you know, we're here to assist you, but you have to dedicate time and hard work to be successful. And you have to understand that it's not easy, regardless of how easy people say it is. You know, it's the beginnings that's so difficult. Yes, you know, it's very easy for me to, like, you know, run my property management company now because I have a series of properties and I just collect the money, right? But it took so much hard work to get to the point where I am today. Same with day trading. You know, it's so easy for me to day trade and identify potential because I know how to do it. But if you ask me the first 5 years of when I was losing money, is that something that, you know, that I found easy? No, it's a lot of hard work. It's a lot of time, and you don't see the reward instantly. Just know, with a lot of hard work, being smart and being creative and knowing that, you know, and identifying that this market does have potential, or whatever market it is that you want to invest in, then go for it, set up a plan, manage your risk, and it's up to you to see if you're going to be successful in this. Thank you guys again. Take care, and let's make sure that we end the year on a green note. Appreciate it.